I have Marc Faber with me. He's the editor and publisher of the Gloom Boom and Doom Report that you can find on gloomboomdoom.com. And always happy to share some positive views about the market. I was actually looking back, Mark, when we met last time in 2010, and I even have this magazine from RBS where we interviewed you at the time. But I think that was the last time we met.
Yes.
But I think the topics are still the same.
Yes.
So, you know, the Nasdaq is centimeters away from an all-time high. What do you make of it in these challenging times for everyone?
You know, it's like if you look at the Nikkei index in Japan, or the Dow Jones, or the S&P, it doesn't tell you very much, because the S&P has 500 different companies, and the New York Stock Exchange maybe around 2,500 different companies. So within an index, just 2 or 3 stocks can push an index higher, but the broad market is still down a lot. So in America, we have some stocks that have done well. They are close to a new high, as you just pointed out. In fact, some stocks have made new highs. Amazon, Netflix, Zoom, which we are using, all these stocks, they made new highs post the February high. But the majority of stocks is, of course, as is the case in Europe, is of course still much lower than it was a year ago or in early February, because many markets, as you know, in Europe have not performed well last year, or emerging markets, they've been poor performers since 2015. So there are some indices like the NASDAQ 100, the NASDAQ, they're close to new highs, but the majority of stocks is, of course, not close to a new high.
No, but if we look at the broader market, indeed, there are some clear sectors like financials that have not doing well at all, which is quite reasonable. But those stocks are now picking up. Are investors too optimistic about the market?
Actually, in my last report, I've written about financials that in principle, they are beneficiaries from money printing, and that they are inexpensive. But this is the big thing in the market for the last few years. Value stocks and financials are value type of shares, as is energy. These two sectors have performed badly, whereas semiconductor stocks, the FANG and FANG-related stocks have done fantastically well. This is why the divergence between growth stocks and value stocks is now at the widest it's ever been. And one of the reasons, or this is one of the reasons why active managers, in other words, not the index fund investors, but active managers, have tended to grossly underperform the market, because the investment manager is a type that looks for value. Basically, it doesn't look just for growth stocks. And so these people have grossly underperformed the market, and including myself. I'm also a value investor. Okay. And I have underperformed the S&P. There's no question about this. I have outperformed maybe the Asian indices, but I've underperformed the S&P.
And what's your stance then towards growth stocks? Is there any value in adding some of these to your portfolio, or do you stick to value at the moment?
I stick to value. But, you know, some people say, well, we have to maybe adjust that when you have 0 interest rates, there may be some value in the growth stocks. But in my view, if I measure them on a price-earnings ratio and price to book and price to sales, it would seem to me that they're very expensive.
Mm.
And I think the global economy is being supported by these various packages that are put together by governments and by money printing. But when you really analyze facts, then the money printing is lifting stocks, but it doesn't lift the economy of individuals a lot, or not at all. And the government support packages, they have to continue afterwards. You understand? It has to be permanent, and that retards economic growth. If you look at the 19th century, 1800 to 1900, we didn't have social security. We didn't have central banks. And the global economy was growing at a much faster pace than it is today.
Yeah.
Because people at that time, there were many, many recessions and depressions in the 19th century. But people, they had a sense of responsibility. So when they worked, they put some money aside for savings, and they didn't leverage themselves a lot. They didn't have consumer credit and so forth. So the economy went into recession, but as Schumpeter described, the economic process is dynamic, and one industry went into recession or depression and another came up and lifted the economies out of the recessionary period.
Yeah. At Markets Are Everywhere, I'm doing a theme on China at the moment.
Yes.
Obviously, you're based in Thailand already for quite some years. What's your? I'm always interested in an Asian perspective on China. What do you think about China's position, the relationship with the US, and the growth potential of the country?
Well, I just like to say this. I mean, I'm a Swiss. I'm not an American, and I'm not a Chinese, so I'm relatively free to have an opinion, whichever that opinion might be. I think the world is very biased against the Chinese. The Chinese have done very little harm to the world, and the world has done great harm to China in the 18th and 19th century, and in the 20th century, by supporting a crook like Chiang Kai-shek instead of giving some support to Mao Zedong. It was a civil war, but the US decided they want to be against Mao Zedong. It's like they decided to have a Cold War with Russia and so forth. So I think the Chinese haven't done great injustice upon the world. It is true that they invaded Tibet. But if you look at the geography of Tibet and also at the history of Tibet, it's actually a Chinese territory originally. And it is also unacceptable for China to have Tibet in the hands of a hostile power like the US or Britain, because most of the water in Asia, whether it's the Indus River or the Irrawaddy or the Ganges or the Yangtze, all the water comes from Tibet. So Tibet, although it's very poor, and it has improved under the Chinese, to be fair, they essentially supply the water to Asia. And it would be irresponsible for China to let this get away into the hands of a hostile foreign power. Mm-hmm. And the Americans and the British were scouting around Tibet, ready to grab it during essentially the Chinese Revolution.
Okay, but
so my thought about China is you and I may disagree with the human rights record of China, you and I may also disagree about the human rights record of the US. You understand?
Yeah.
It's not that one is black and the other one is an angel. That is not at all the case. And I'd say economically, the Americans always accuse that China has stolen all the technology and knowledge and so forth. The Americans in the 19th century stole all the technology and knowledge from Europe anyway. There's no question about this. So countries, as they open up and develop, they take over old technologies and so forth. And the US now, this China bashing is politically motivated because it resonates with the simple mind of a simple American, which is well represented by a simpleton who is in the White House, Mr. Trump.
Yeah.
And the simpleton in the White House, he knows if he bashes, keep on bashing China, China is responsible for the unrest in the cities in America. China is responsible for the loss of jobs. China is responsible for the COVID-19 and so forth and so on. The more they do that, the more it resonates with very simple people.
Yeah.
And Mr. Trump, unfortunately, actually believes this BS. It's hard to believe, but he believes it.
But if we look back at the markets again, when we, I would say last time met in 2010, commodities were really in a peak, were doing very well. Let's say the last 8 years have not been very favorable for commodities, whilst China needs a
disaster.
Yeah, it's a disaster. But if you see the growth and also the foreign direct investments in China, one may have expected commodities to do better. But is this something that you see changing in the coming years?
This is the funny thing about printing money. And Copernicus, he already attracted people's attention to, because aside from being a scientist, he was also an economist. And he wrote about money and how money flows into the system through money printing and so forth, through the issuance of money. And he said the issue, a sovereign prints money or issues coins, it doesn't flow evenly into the economic system. It sometimes go into one sector and sometimes into another sector. So if we look at the last 20 years, we had a bull market in commodities 1999 to 2000, say, in the case of gold, 11. In the case of oil, it was 2008 and so forth. Because each commodity peaked out a little bit at a different time. And after 2011, 2012, commodity prices have tended to come down. And then in the case of gold and silver, they are the bear market 2011, September 2011 to December 2015. Oil actually went below zero in March. Yes,
But
this is something new. I've been in business for 50 years. This is the first time I see a negative price.
It's amazing, isn't it? But although oil prices are now going up again, you know, there's still so much supply. It's going to stay low for a long time, right? Yes,
but you know, they can manipulate prices. It's a big market, but there is a lot of liquidity around. Recently, over the last 2 months, money supply in the US, TMZ, has been growing at over 30% annual basis. You know, this is a huge increase. And that, when people say, well, why do stocks go up? They go up because of money printing, no other reason. They don't go up because of earnings going up or anything of that sort. They go up purely because of the liquidity injection. And as you know, you hand out money to people and you print money. In the US, they printed $3 trillion. And the country shut down, so people can't spend it. They don't spend it. They gamble on Robinhood websites. They buy stocks and sell stocks the whole day. They trade. Nobody's going to work anymore. Everybody will be a day trader. If the government hands out money to people, nobody will work anymore. They'll just stay home and trade stocks.
Isn't it to bridge a quarter of earnings? You know, it seems countries are opening up. A lot of people are scared that it's too early. But if you look around here in Europe, then you know, there's a strong desire to return back to normal. And perhaps the third quarter won't be as bad as a lot of people fear.
I think if we were at 100 before the corona crisis, or the man-made crisis, the corona is not a problem. The COVID-19 is a small problem by historical standards, but the reaction of the government is the problem. So we have this problem. So we were at 100, say in December 2019. Then the economy collapsed. In some sectors, it collapsed 90% in tourism, you know, airline traffic and so forth. But in other sectors, it collapsed much less. And of course, government employees, they didn't suffer. They got maybe even a salary increase. But that's another story.
I doubt it. I doubt it.
That is always the case. I'm telling every young person, you want to do well, go and work for the government.
Yeah.
Best. You don't have to work very hard and you get a high salary. Yeah. Anyway, then we fell, say, in economic activity from 100 to 60 or 70, whatever it is. We'll rebound, in my opinion, to 90, but we're not going to go back to 100.
Okay. We may agree to disagree with the government approaches. Nevertheless, in the US, there's a clear, you know, strong desire to support the economy. In China, Xi Jinping is doing a lot to help his country forward. What's your view on Europe with all these negotiations still? Has it progressed in the last 10 years? Where do you see this go? Will there be more harmony or will it fall apart?
Well, this is a political issue, and the simple answer is I don't know. I think they want to stay together by and large. And as we've seen now with Britain, it's not so easy to break away. And, you know, people in the southern countries, Italy, Spain, Portugal, in principle, they might like to break away from the EU, but then the people think about the pensions. And as long as the pensions are paid in euros, they're happy, because if they break away and the currency tumbles by 30%, they're not going to get the same pensions. You understand? These are political issues. I think in terms of markets, since we're talking about markets, I think European stock markets are inexpensive compared to the US. I think the euro as a currency is very depressed compared to the US dollar. In fact, I believe the US dollar and interest rates in the US on long-term bonds is the Achilles heel of the US. Once interest rates go up and once the US dollar tumbles, all will be over for the US. It will be a complete mess, and it's going to happen one day. but I don't know exactly when. I believe the dollar has begun to decline, and that this decline will be a long-term bear market for the US dollar.
Mm. Yeah. You're a value investor. Where do you see value at the moment? What do you focus on these days?
Yes. First of all, I think that if we look at real estate, as you know, I don't know whether you live in Amsterdam or where, but in the center of Amsterdam, prices are very high. But in the countryside, they're not that high. And certainly, if you go to Milan or Rome, prices are very high. But you go to small villages in Italy, they will give you a property. You just have to rebuild it. You understand?
Yeah, it's true. True.
The internet has enabled us to live anywhere in the world, and we can work from home. It's a complete nuisance or completely inefficient for someone to get out of his house every morning, drive 45 minutes or walk or take the bus for 45 minutes, go to an office, waste his time in meetings with colleagues that you don't particularly like anyway. And after work, you go drinking with some friends and you have a good time, and then you go home. It's completely inefficient. Much better is to stay at home, work from home. You go out at night for drinking with your friends and buddies or girlfriends or whatever it is. And you never go to the office. You can work very well from your house. And once a month, you go to your office to meet your boss, to tell him that you're still alive, so forth. You understand? These are things that will change now. I think a lot of companies will tell their employees, you don't need to come to the office every day, stay at home and work from home. And so what will happen? The real estate in the city centers will be under pressure in terms of prices. And the prices in the countryside that are very low, whether it's in Spain or Italy or Portugal or Turkey, they can appreciate substantially. You know, 30 years ago, without internet, it would not be possible for me to live in Chiang Mai in the north of Thailand. But nowadays, we can talk together on the internet. I've been through Zoom. I have my Bloomberg on my computer. I can trade stocks like anybody else in the world if I want to. I'm not a trader, I'm an investor, but I could trade stocks and commodities. So one asset class that I think is relatively low is real estate in secondary locations, anywhere in the world. Number two, we talked about stocks before, about how expensive some stocks were and how depressed other stocks were. I mean, maybe someone will tell me, yeah, you're wrong, but Royal Dutch is a very inexpensive stock at this present level. Now, someone will say, yeah, but the environment and this and that and Greta and so forth. I think this is yesterday's story. I think oil will still be used. It's still very efficient. And it's actually nowadays rather environmental friendly. Because all this BS about batteries and so forth, how do you dispose all these batteries? Will be another story. You can't just dump them into the sea. So there are many issues. And the banks, as I mentioned, and the insurance companies are very depressed. Of course, part of the reason are negative interest rates in Europe. But this is my point about the government interventions. They intervene and they have no clue or little knowledge of the consequences of their interventions. You know, all these government programs, they have consequences. And in my view, the money printing over the last 20, 30 years has actually inflicted permanent damage to economies. Permanent. It has also created significant increase in wealth inequality, particularly in the US. In Europe less, because we have a tax system that is very high, but also in Europe, the wealthy people are much wealthier than 20, 30 years ago, including myself, and the poor people, the workers, in real terms, inflation adjusted, and not inflation adjusted by the inflation published by the government, but the real cost of living increases. The workers are worse off today than 30 years ago.
Well, that is definitely a theme that will stay there for quite a while, because that is going to be more visible every time.
Yes.
I think for now, Mark, so real estate in secondary locations, the oil companies, financials, that's a good shopping list for the coming period.
And also, I'd like to say, you know, in Asia, not everything is perfect, and the governments are almost as bad as they are in Europe, but not quite as bad, but almost. It would be difficult to exceed the low quality of European governments. But in Asia, I think we still have a society that can tighten their belts. So things go bad, people retrench, they go home, they stay with the families. And then when things improve again, they go back to work. And I believe that in Asia, business will come back relatively well. However, I think people will travel less. I think this is now really also a big segment of the traveling was business travels. You know, the companies, the banks and so forth, they let their employees travel. It was kind of a bonus. You go there, you visit your clients. But nowadays, look how we talk. Do I need to see you in person? I can even drink with you, have a nice beer.
Just for the people here, it's 6 p.m. your time, right?
Yes.
Yeah, it's still early. Yeah. Yeah. Although it would be nice to see you at some point.
Yes.
But this is very convenient to pick your brain like this.
Look, I think people like a personal touch. And as soon as the bars open up again in Thailand, I'll be the first one to go there.
Yeah.
But I don't think, even if I had the clients I had before, I don't think I would need to travel as much as before, unless I wanted to. But at my age, I feel quite happy to be in the house and have my office here and so forth, and my garden and the dog. So it's, for me, not a hardship. And you look like being in a nice office with lots of books.
That's something that we share. Mark, I'd like to thank you a lot for this conversation. Well, I hope you stay well, and I hope to be in touch again in the future.
Yes. Thank you very much for your time. Have a nice evening or afternoon.
Afternoon.
Bye-bye.
Thanks.
Bye-bye.
Ciao.
Ciao.